Hello friends, I hope you are all doing good. It's been a long time that I have met you virtually. So in this video, I thought of meeting you just 1 month before the examination, 10, 15, 20 days before the examination, so that you can get updated with the amendments and also the section summary. In this video, we will be basically discussing about the amendments which are applicable for your present examination, that is May 22 or June 22 examination, and also we will be revising the provisions with regard to the GST law. So this material which I am taking reference of, that will also be made available to you in the description, so you can download it from the description box. Apart from that, there are some queries with regard to crash course etc., which students are asking. The crash course which we recorded during the month of September or October 2021, the same crash course videos are applicable for this examination also, because there are very less amendments, very less amendments, and these amendments are actually self-explanatory. I have not made a separate amendment video because these amendments are generally very small and also self-explanatory. It is not that you need someone guidance for understanding this amendment. So I thought of making the amendment video along with my Sanjeevni Buti, which I normally upload. Okay, and with respect to the chart materials are available for the examination. So I keep on getting queries, whether it is available or not available, whether it is amendment or not amended. Every chart material which you get is, say for example, now whatever material you are asking, a person is asking, if he is asking say 3 months before the examination, then he will be getting the updated material which is applicable for his examination. So now say for example, I am writing the examination in the month of May, sir, in the month of June, sir. My chart material, is it amendment? 100%, yes, it is amendment. Sir, what if I am writing the examination in the next attempt? Then also you can purchase the same material, or you will have to wait till August month. The fresh materials, the printed materials will come, and that can be purchased. And for placing the order of material, you can always use WhatsApp to send me a message on this number 962002-2004. This is my mobile number. You can also ask your queries, not only with regard to the materials etc., but also your the subject queries on this number. Please note, this is available only for WhatsApp. No calls will be accepted on this number. Okay, with that being said, let us now start our discussion on this beautiful topic called as goods and services tax. GST amendments under GST. What are the different amendments which are applicable for your May or June 2022 examinations? There are not much amendment. So the first amendment is in your chapter called as exemption. Sir, what is the amendment in this chapter, sir? There are some existing provisions for which the due date was 30th September 2021. For which the due date was what, sir? 30th September 2021. Now the due date has been extended to 30th September 2022. Which are those different exemptions, sir, for which is applicable for for which the extension is till 30th September 2022? These are services by way of transportation of goods by an aircraft from the customs station of clearance to a place outside India. That is, whenever you are exporting any goods, and if you are transporting the goods through an aircraft, and next point talks about vessel, through an aircraft or an vessel, that is through an aeroplane or through a vessel, through a ship. If you are exporting the goods from the customs station in India to any place outside India, then whatever services you are taking for that exportation, that is not liable to GST. They are exempted from payment of GST. You don't have to pay any GST. Then there is one more amendment wherein before the word total expenditure was used. Total expenditure means what? 100% expenditure. That is replaced by 75%. What is that exemption, sir? There was an exemption with regard to services provided to central government, state government, etc. What is that services? I'll read the amended provision. Services provided to central government, state government, union territory under any training program for which 75% or more of the expenditure is borne by central government, state government, local authority or union territory. So if there is any training program which is conducted and for which the expenditure is borne by central government, state government, local authority. Before it was 100% of the expenditure should be borne by central government, state government, local authority, but now they have reduced it to 75%. So now if 75% or more than 75% of the expenditure is borne by central government, state government, then for any training program which is conducted for central government, state government, etc., then that exemption, then also that exemption will be available. Just a second. Then a new exemption has been introduced. Entry number 61A has been inserted. What is this exemption talking about? This exemption talks about transportation services by way of granting national permit to goods carriage to operate throughout India or contiguous states. Now normally we go to RTO for whatever registration you are taking. If you are purchasing a new vehicle, then you will take registration for that particular vehicle. Normally the local registration you will get, that is if I'm from Bangalore, so I will get Karnataka registration. If you are from Tamil Nadu, you will get Chennai from Tamil Nadu registration, etc. You will get local registration. Now these private vehicles which we are owning, normally the whiteboard vehicles, these are normally we can take it anywhere throughout the countries. And also there are some yellow board vehicles, there are some vehicles with respect which are carrying goods, all these trucks, etc. Now these vehicles, they have to take permission for transportation of goods. They also have to take a vehicle registration number. Now normally whatever, say if I am applying for a for my vehicle number with RTO, I will have to pay registration charges. That registration on that registration charges, they are also collecting GST on that registration charges, because it is a services which is provided by RTO to you. They are also collecting GST. Now if the same type of services is provided to the goods transport companies also for the purpose of transportation of goods, all the trucks, etc. If you are registering a truck, whatever truck registration, whatever number you are getting and whatever registration charges you are paying, on that no GST will be levied. If it is for operation throughout India, if it is through operation throughout India, if you are taking a registration only for operation in your respective state, then no, it should be all India permit. You would have seen many vehicles written as all India permit, correct? On the above the number plate, they will write this all India permit, etc. Please note, this is only for goods carriage vehicles. It is not for passenger carriage. Sir, Ola is having vehicles for which it is taking registration and they are taking passengers all over the country, sir. Is exemption available? Answer is no. It is only for goods carriage. That is important. National permit. Then there was one exemption which has been withdrawn. The exemption was with regard to leasing of assets by Indian Railway Finance Corporation. That exemption has been withdrawn. That means what? Now this particular thing is taxable. Now this particular exemption which you are saying, which was there all this date, now the exemption is no more applicable. So that exemption is taxable. Which is that, sir? Services of leasing of assets by Indian Railway Finance Corporation to Indian Railways. So there are two separate entities. Indian Railway Finance Corporation, it is leasing all these assets. What are those assets? Say the coaches, the engines, etc. They are leased out by Indian Railway Finance Corporation to Indian Railway, IRCTC. Then whatever amount they are paying was exempt all these days. Now it is taxable. GST is payable. Now these are the amendments in your exemption chapter. See, we have a topic called as supply. Section 7, no amendments. Section 8, no amendments. Section 9, no amendments. Section 10, no amendments. Directly the first amendment was in section 11. Then section 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, no amendments. The next exemption is in your registration chapter. That also not all the topics of registration. Section 30 of your registration. The next amendment is where, sir? In section 30 of your registration. Now section 30 of your registration chapter talks about what? Section 30 of your registration chapter talks about revocation of cancellation. It talks about what, sir? Revocation of cancellation. Say for example, the officer has cancelled your registration. Section 29 talks about cancellation of registration. Say you have applied for registration on voluntary basis. There are many different cases. One of the example is, say I have applied for registration on voluntary basis and I have not started my business for a period of 6 months. I have taken the registration but I am not filing my returns. I have taken the registration by fraud, misrepresentation, etc. In such cases, what will happen? The officer will cancel your registration. If there is any cancellation of registration by your officer, you can always apply for revocation. You can always apply for revocation. You can tell the officer, no sir, tell me the reason why you are cancelling my registration. I think sir there is a misunderstanding, etc. You can always reply to that particular thing. Normally, revocation for cancellation can be applied within how many days? Within 30 days. within how many days should I apply for revocation? Section 30 talks about revocation of cancellation. Section 30 days. If your registration has been cancelled by the proper officer, then you can apply for revocation of cancellation within 30 days of date of cancellation order. Date of cancellation order. Within 30 days of date of cancellation order, you can apply for revocation. Now this period, what have they done in this particular section? They have added two provisos. They have added two provisos. Before section 30 was telling that you should apply for revocation of cancellation within 30 days. Now they have added a proviso which says this 30 days can be extended by 30 more days by ACJC. Joint Commissioner or Additional Commissioner can extend this period of 30 days for a further period of 30 days. And this 30 days can further be extended to 30 more days by Commissioner. So normally the limit is what, sir? Normally the limit is 30 days. I should apply for revocation within 30 days. This can be extended by Additional Commissioner or Joint Commissioner by how many days? 30 more days. Sir, what if I am not able to revoke within this time also? Then you can go to the Commissioner. He will give you extension of 30 more days. He will give you extension of 30 more days. So there are two provisos which has been introduced. Only one small amendment which they have made. Next provision, next amendment is in this chapter called as tax invoice debit note and credit note. Sir, what is the amendment in this chapter? In this chapter, the invoicing provisions, they have not an amendment actually. In e-invoicing, if your aggregate turnover crosses 50 crore rupees, 50 crores is from 1st April 2022. For your examination, it is not 50 crores, it is 100 crores only. From 1st April 2022, for the next attempt it is 50 crores, but for the present exam which you are writing, it is 100 crores only. So if your aggregate turnover, in any of the financial year starting from financial year 17-18, if it exceeds, if it crosses 100 crores, then for you invoicing provision is applicable. You will have to follow this invoicing provision. You will have to follow what? This invoicing provision. However, there were some people who were exempted from following this e-invoicing provision. Who were those people? CPICs. Who were those people, sir? These people were CPICs. What do you mean by CPICs? C for cinema, halls and multiplexes. P for passenger transport service provider. I for insurance company, banking company, etc. G for goods transport agencies. And S for special economic zone unit, SEZ units. So these people were something which were already there. Now one more addition is there. The said notification has amended to exempt government department and local authority also for mandatory requirement of e-invoicing. So now government departments as well as local authorities are not required to do e-invoicing. They don't have to follow e-invoicing provision. Who, sir? Government department and local authority. So now the the memory technique has changed to government CPICs. Government CPICs. What does government do in their department, etc.? They normally don't work. People say, I personally feel they work because I am, as a chartered accountant, we have to meet government department, etc. a lot of time, and I see they work. So now, sir, what if they are when they are not working? What do? They see PICs. They see PICs. So government sees PICs. Government department, local authority. C for the cinema halls and multiplexes. I for insurance company, banking company. G for goods transport agencies. S for SEZ units. P for passenger transport service providers. Okay, so that is the only amendment in your tax invoice debit note and credit note chapter. There is an amendment in your e-way bill topic. E-way bill topic, if you remember, they had given a restriction. They had given a restriction wherein they had told in rule number 138E, they had told that if a person is not filing the return, then he will be restricted in generation of e-way bill. Now, how was the restriction before? Say for example, Dilip has not filed his return for continuously 2 months. I have not filed my GSTR 1 or GSTR 3B for 2 months. Now I was registered under GST law. Now normally what used to happen, Dilip can be a person who is purchasing, Dilip can be a person who is selling the goods. Correct? So these two possibilities are there. So normally what was happening, say any person is selling the goods to me. He is selling the goods to me. Now, because I have not filed the returns for continuously 2 months, there is a restriction which is imposed on me. Any person who is supplying the goods to me cannot generate the e-way bill in my name. He cannot generate the e-way bill in my name. Similarly, I also cannot generate the e-way bill for my sales. And also the transporter cannot generate the e-way bill. So the restriction was given to me as a recipient as well as a supplier, and also the transporter was not able to generate e-way bill on my behalf. So this complete restriction was there. What restriction was there? Any person from whom I am purchasing the goods, then also e-way bill cannot be generated by him on my name. If I am selling the goods to someone else, then also e-way bill cannot be generated by me in the recipient's name. And sometimes what happens, we tell the transporter to generate the e-way bill in our behalf. So that was also not possible. This was there before. The restriction was there, what sir? The restriction was on sale, purchase, as well as it was imposed on transporter. Now what the amendment has been made, what they have told is, the restriction will not be given like this. Say, if you are purchasing the goods, Mr. Dilip, two things are possible. You are purchasing the goods or you are selling the goods. For your sales only the restriction will be put. For your outward supply the restriction will be put. For your inward supply, for your purchases, there will be no such restriction. So if any person is selling the goods to you, then he will be allowed to sell the goods to you. He will be allowed to generate the e-way bill in your name. But for whatever sales you are making, you will not be allowed to generate the e-way bill. So now the restriction is on what, sir? Now the restriction which was generally on everything, now they have told, no, it is not on everything, it is only on your outward supply. The restriction is only on your outward supply. Any sales you are making, any outward supply you are making whose values, whose consignment value is more than 50,000 rupees, you will have to generate an e-way bill. Now I will not allow you to generate the e-way bill if you have not filed your returns. I'll just read this for you. Rule number 138 rule number 138E of CGST rule contains the provision with regard to blocking of e-way bill generation facility, that is disabling the e-way bill generation facility. Earlier what was happening? Earlier the user was not allowed to generate the e-way bill for a Gstn. Before they had told for a particular Gstn, Dilip has a Gstn, for that Gstn e-way bill generation is blocked. Any person selling to him, any person who is purchasing from him, etc., no e-way bill can be generated. But now they have given some relaxation. What is that relaxation? I will directly read the new law. The said rule has been amended to relax the restriction. Blocking of Gstn for e-way bill generation would only be for defaulting supplier. It will be only for the defaulting supplier and not for the defaulting recipient or transporter Gstn. So therefore now the blocking will be only for the supplier. If a person is supplying and he has not filed his return or he has not complained with the provisions which is restricting him to generate e-way bill, only for his outward supply the restriction will be there. If he is making the purchases, restriction can be generated. If he is a transporter who has not filed a return, then also any person can generate the e-way bill in my name. Suspended Gstn cannot generate e-way bill as a supplier. However, the suspended Gstn can get e-way bill generated as a recipient or as a transporter. Okay, the next amendment is in your returns topic. So I feel this amendment is important. This is one amendment which is good amendment, and I mean this amendment is basically with regard to your late fees. Your provision section 47 says if you are not filing the return within the due date, then you will have to pay late fees. Sir, how much is that late fees? Late fees is rupees 100 per day subject to a maximum of rupees 5,000. Under CGST law, same provisions are there under SGST law also. But they had made some amendments in the sense they had given a notification. By a notification they have told that if you are filing nil return, the late fees which you have to pay will be only 25 rupees subject to a maximum of 5,000 rupees, and if you are having some data, then the late fee will be 50 rupees subject to a maximum of 5,000 rupees. Now they have amended the provisions completely. Now they have told the amount of late fees which a person has to pay will depend upon the type of registered person he is. Sir, what do you mean by type of registered person? Composition dealer, normal, regular dealer, casual taxable person? No. Type of registered person means here they have divided it based on their turnover. They are told, I will check your turnover, I will check your aggregate turnover. Based on your aggregate turnover, I am going to decide how much late fee you are supposed to pay. What is the new provision telling? Late fees for delay in filing of GSTR1 or GSTR3B. So if you are not filing your GSTR1 or your GSTR3B within the due date, say GSTR1 due date is 11th if you are opting for monthly, and GSTR3B due date is 20th or 22nd, depending upon what type of how much your is your turnover. Now let us not discuss about the due dates of filing return. The provision says if you are not filing the return within the due date, then you will have to pay late fee. Please note, if you are not filing the return within the due date, then you will also have to pay interest as per section 50. Interest will be applicable. Interest you will have to pay only if there is any tax payable by you in cash. Only if there is any tax payable by you in cash. But here late fee is something which you will have to compulsorily pay. Late fee, something which you have to compulsorily pay for delay in filing of returns. You have not filed the returns within the due date, you are filing it later, you will have to pay the late fee. It is not linked to your tax payable. It is not linked to your tax payable. It is linked to your filing of returns. So what division they have made? They have divided the registered person into three categories. What are these three categories, sir? These three categories is: category number 1, you are a registered person who has not made any outward supply or who has no tax liability under GSTR3B. Who has not made any outward supply or who does not have any tax liability under GSTR3B. In the simple sense, if you have nil supplies in a particular month, if you have 0 supplies in a particular month, for you the late fee will be maximum. The maximum limit they are specifying. The maximum late fee which you have to pay will be 500 rupees. Before it was 10,000 actually. When taken together, CGST and SGST, before it was 10,000. Now they are telling no, combined maximum amount which you have to pay will be 500 rupees. 250 under CGST, 250 under SGST. Please note, this is the maximum amount of late fee which you have to pay. Sir, then what is the late fee per day, sir? The late fee per day is same. If it is a nil return, then it is rupees 25 per day. So now the provision which you have to read will be, if you are filing nil return, then it is rupees 25 per day, subject to a maximum of rupees 250. Subject to a maximum of rupees 250. This is under CGST law. Similarly, same provisions is there under SGST law also. So effectively your late fee per day will be 50 rupees. 25 under CGST, 25 under SGST, and maximum it can be how much, sir? 500 rupees. Maximum it can be how much, sir? 500 rupees. Then registered persons who, other than those covered above, registered persons who is not filing nil return, who has some supplies which is made by him. Now here 2 arrow marks. Your aggregate turnover is less than or equal to 1.5 crores. Your aggregate turnover is more than 1.5 crores. Your aggregate turnover is less than or equal to 1.5 crores, or it is more than 1.5 crores. If your aggregate turnover is less than 1.5 crores or equal to 1.5 crores, then the maximum amount of late fee which you have to pay is 2,000 rupees. This is combined late fee, CGST law and SGST law, 2,000 rupees. Sir, what is the actual provision telling? Actual provision says the late fee will be rupees 50 per day, subject to a maximum of rupees 1,000. Subject to a maximum of rupees 1,000. This is under CGST law. Rupees 50 per day, subject to a maximum of rupees 1,000 rupees. Same provisions are there under SGST law also. So maximum how much they can collect? 200 rupees. Sir, if I have done a delay for 50 days, will it be 50 into 50, that is 2,500, or it will be 1,000 rupees only? It will be 1,000 rupees only. Irrespective of how many number of days delay you have done, the maximum amount which they are going to collect from you is 1,000 rupees. This is the maximum amount. Sir, if I have done delay only for 10 days, sir, then it will be 500 rupees. It will be 500 rupees. Whichever is less. Sir, what if my aggregate turnover is more than 1.5 crores? If your aggregate turnover is more than 1.5 crores, then the maximum late fee is 5,000 rupees. Under CGST it is 2500, SGST it is 2500. So here also it is same, rupees 50 per day, subject to a maximum of 2500 rupees. Subject to a maximum of 2500 rupees. And for all the other categories of registered person, it is the normal late fee provisions which is there, that is rupees 100 per day, subject to a maximum of rupees 5000. That is 5000 under GST, 5000 under CGST, and 5000 under SGST. So maximum amount which you have to pay is how much, sir? 10,000 rupees. If you are a composition dealer, you have to file something called as GSTR 4. What is the late fee for GSTR 4? If it is a nil GSTR 4, then it is 250 CGST, 250 SGST. If you have some data in it, then it is 1000 CGST, SGST, 1000 CGST and 1000 SGST. Maximum it is 2000 rupees. And for GSTR 7, GSTR 7 means what, sir? GSTR 7 is for TDS person, rupees 25 per day, or rupees 100, whichever is less. See, TDS, who has to deposit TDS? Government has to deposit TDS. Section 52, section 51, not 52, section 51 talks about TDS. Who has to deposit TDS, etc.? Government or government departments, etc., local authorities, and deductor. A deductor has to deduct the TDS, who has been specified in the section 51. Now, if the government is not deducting the taxes within the time limit, for them the maximum amount which they are going to collect is 100 rupees. Maximum amount of late fees which they are going to collect is 100 rupees. Okay, nothing can be done. Government are the lawmakers, they will make the law as per their own benefits. Now, there was one provision with regard to GST audit, section 35 subsection 5. The provision with regard to what's the GST audit, this provision has been removed. Before, what this section 35 subsection 5 was telling, a registered person's books of accounts are required to be audited by a chartered accountant or a cost accountant if that registered person's aggregate turnover crosses rupees 2 crores in a particular financial year. So if your aggregate turnover crosses how much? 2 crores, your books of accounts are required to be get audited by chartered accountant or cost accountant. This is under GST law, not under income tax. Income tax, it is still there. Now, what was happening along with the annual return GSTR 9, there is something called as 9C which was uploaded. This 9C is nothing but a reconciliation statement which is required to be signed by a chartered accountant and cost accountant. Now, this provision has been removed. Now they have told this reconciliation statement which was supposed to be filed signed by chartered accountant, cost accountant, need not be signed by chartered accountant or cost accountant. It can be directly signed by this reconciliation statement can directly be signed by the normal assessee only, the registered person only, the taxpayer only. Directly he can file his GSTR 9 as well as 9C. So there is no authentication which is required to be given by chartered accountant or cost accountant. The registered person can himself submit this GSTR 9 as well as 9C. Okay, so these are the major amendments which were there in your GST law. Now let us start our discussion on the section summary. Let us now completely super fast revision. Let us do the super fast revision of all the different provisions. Okay, now please note the speed will be increased because it is a revision. We'll be doing it on a very super fast basis. Section 7 talks about what, sir? Section 7 talks about supply under GST. What is supply? Supply is taxable event under GST law. Taxable event under GST law is what, sir? Taxable event under GST law is supply of goods or services. Section 7 subsection 1 clause A says supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made by a person for a consideration in the course or furtherance of business. Goods means what, sir? Goods means, so if I want to call something as a supply as per 7(1)(a), then that supply should be of goods or services made or agreed to be made by a person for a consideration in the course or furtherance of business. 5 elements should be satisfied. Sir, what do you mean by goods? Goods means every kind of mobile property other than money and securities, but includes actionable claims, growing crops, things attached to or forming part of land. which can be further supplied. Services means what, sir? Services means anything other than goods, money and securities, but includes activity in relation to use of money or its conversion from one form to another form, from one currency to another currency, from one denomination to another denomination, for which a separate consideration is charged. Sir, what do you mean by consideration? Consideration to arrow marks, payment in money or otherwise by the recipient or any other person, but shall not include the subsidy which is given by central government or state government, and monetary value of any act or forbearance by the recipient or any other person, but shall not include the subsidy given by central government or state government, provided that refundable deposit shall not form part of consideration. Refundable deposit means what, sir? If you are making any deposit, say for example house rent advance which you have paid, normally it is refunded. Once you vacate the property, it will be given back to you. These are refundable deposits. These will not form part of consideration unless until they are adjusted as consideration. Then, sir, what do you mean by a recipient? Recipient, again, two arrow marks, recipient. If the supply which is made, the supply of goods or services which you are making, it includes a consideration. In such cases, recipient is the person who is paying such consideration. If the supply which you are making does not include any consideration, then the recipient is the person. For goods, it is the person to whom the goods are delivered, and for services, it is the person to whom the services are rendered. Sir, what do you mean by the supplier? Supplier means the person who is supplying the goods or services. Very simple definition. Supplier means a person who is supplying goods or services, and it includes the agent who is supplying the goods on behalf of that particular registered person. Then section 7 subsection 1 clause B. Section 7 subsection 1 clause B talks about what? Importation of services. It says importation of services for a consideration, whether for business purpose or not, whether it is for your business purpose or for your personal purpose, in both the cases it will be treated as supply. Sir, what do you mean by importation of services? I will call a particular activity as an importation of services if the supplier is located outside India, recipient is located in India, and the place of supply is also in India. Section 7 subsection 1 clause C. Section 7 subsection 1 clause C talks about different activities which shall be regarded as supply even if it is made without consideration. Schedule 1 activities. So section 7 subsection 1 clause C says there are few activities which is specified in schedule 1. These activities will be treated as supply even if it is made without any consideration. How many activities are there? There are totally 4 activities in schedule 1. What are these 4 activities? Permanent transfer or disposal of business asset provided input tax credit has been taken on that business asset. Then supply of goods or services or both by, between registered person or between distinct person referred to in section 25.4 or 25.5 if it is made in the course of business. This has a proviso which says provided that any gift given by employer to the employee, if the value of the gift is not exceeding 50,000, it is not a supply. If it exceeds 50,000, then the entire value shall be treated as supply. Any gift given by employer to the employee, if the value is not exceeding 50,000, not a supply. If it exceeds 50,000, full value will be treated as supply. 50,000 rupees is per employee per financial year. Then activity number 3, supply of goods by principal to his agent or vice versa, wherein the agent is undertaking to further supply those goods on behalf of principal in his own name. In whose name? In the agent's name itself. Then importation of services by a person. 4th point, importation of services by a person from his importation of services by a person from his related person or from his another establishment located outside India. If it is made in the course of business without consideration, also it will be treated as supply. Section 7.1 capital A. Section 7.1 capital A says there are few activities listed in schedule 2. These activities are supply as per section 7 subsection 1, but I am going to tell you whether it is supply of goods or supply of services. Basically the crux of 7.1 capital A or schedule 2 is if there is ownership transferred or if there is title transferred, then it will be treated as supply of goods. If there is only right in goods transferred, then it will be regarded as supply of services. Basically schedule 2 activities, if you know the definition of goods and services property, you will be able to discriminate whether it is a goods or services. Then section 7 subsection 2. Section 7 subsection 2 talks about what's a negative list of supply or no supply. 2 arrow marks, government notified and schedule 3 activities. So there are some activities notified by the governments which shall not be regarded as supply, and there are some activities specified in schedule 3, those also will not be regarded as supply. Sir, what are these government notified? Grant of liquor license by state government, then activities performed by panchayat or municipality, they are not supply at all. Sir, what are the schedule 3 activities? Schedule 3 activities are services given by employee to the employer in the course of employment, services by court or tribunal except arbitral tribunal, services by MLA, MP, President, Prime Minister, Judge of Supreme Court, High Court, etc. Services by your funeral, burial, cremation, mortuary, including transportation of deceased. Sale of land, and sale of building subject to para 5B of schedule 2. Sale of land no provisos are there. If you are selling any land, it is not a supply. Sale of building, you should refer the provisions of para 5B of schedule 2. What is para 5B of schedule 2 telling? Para 5B of schedule 2 says if the consideration for the sale of building is received after issuance of first occupancy or after completion certificate, then it is not a supply. If the consideration for the sale of building is received before completion certificate or before first occupancy, then it shall be treated as supply. Actionable claims except lottery betting and gambling, third country sales, warehouse sales and high sea sales, these all shall not be regarded as supply. This is specified in schedule 3. Section 7 subsection 3, they say that government may notify some activities which will be treated as supply of goods instead of supply of services, or it will be treated as supply of services instead of supply of goods. Nothing has been notified. Section 8 talks about what's the section 8 talks about taxability of composite and mixed supply. There is something called as composite supply, there is something called as mixed supply. How am I going to tax this composite supply and mixed supply? Composite supply are taxed at the rate of principal supply and mixed supply are taxed at highest rate. Composite supplies are taxed at the rate of principal supply and mixed supply are taxed at highest rate. Sir, what do you mean by composite supply? Sir, composite supply means supply of two or more taxable goods and services which are naturally bundled in ordinary course of business, supplied in conjunction with another, one of which is principal supply. Then I will call it as composite supply. They are taxed at rate of principal supply. Mixed supply means supply of individual goods and services which are not naturally bundled in ordinary course of business, supplied in conjunction with another for a single price, and which is not a composite supply. That I will call it as mixed supply. If it is a mixed supply, I am going to tax that mixed supply at highest rate. Then section 9 is the charging section under GST law. What do you mean by charging section, sir? Meaning you are paying the taxes because of this particular section. See, the reason for payment of taxes is supply. Which section is telling me to pay CGST? Section 9. Which section is telling me to pay SGST? Section 9 of SGST Act. Which section is telling me to pay IGST? Section 5 of IGST Act. Every tax which you are paying will always have a charging section. Section 9 subsection 1. Section 9 subsection 1 says, subject to the provisions of subsection 2, there shall be levied a tax called as central goods and services tax on all intrastate supply of goods or services or both, except on alcoholic liquor for human consumption on a value determined under section 15 at such rates as may be notified by the government, not exceeding 20%. It shall be collected in such manner as may be prescribed and shall be paid by taxable person. So section 9 subsection 1 says what, sir? They are going to collect taxes on intrastate supply of goods or services. What is the taxes? CGST. That CGST will be collected on all intrastate supply of goods or services except on alcoholic liquor for human consumption. That means what? On alcoholic liquor for human consumption, GST can never be levied. Sir, at what rate will they levy the GST? At the rate as may be notified by the government, but maximum rate which the government can levy is 20%. Highest rate which is possible under CGST law is 20%. But presently what is the rate which they are collecting? 14%. And sir, at what value will be determined under section 15, and it shall be collected in such manner as may be prescribed, that is by filing of return. Who should pay these taxes? Taxable person has to pay the taxes. Sir, what do you mean by a taxable person? Taxable person means a person who is registered or liable for registration under section 22 or section 24. Section 9 subsection 2 says CGST on intrastate supply of HP man shall be paid on the date notified by the government. There are 5 products called as HP man: high speed diesel, petrol, crude, motor spirit, aviation turbine fuel and natural gas. On these 5 products, CGST will be payable on a future date as may be notified by the government. Section 9 subsection 3. Section 9 subsection 3 talks about reverse charge. They have told there are few goods and there are few services which has been notified by the government. In case of these goods and services, that the tax is required to be paid by the recipient under reverse charge. Actually, tax payment happens in 2 ways: forward charge and reverse charge. Forward charge means I am the supplier of goods or goods and services. I am the person who has to make the payment of taxes to the government. Say for example, you come to Priya Saris, you purchase a sari, you paid me 10,000. You purchase a sari, I gave you 10,000. I gave you the sari, you gave me 10,000 rupees, and I also collected tax on that particular sari. I collected the taxes from you, I made the payment of taxes to the government. This happens in case of forward charge. Reverse charge means what, sir? I supplied you goods or services, you are making the payment of taxes to the government. So section 9 subsection 2 gives the list of goods and services for which the tax is required to be paid by the recipient under reverse charge. Goods are not important, services are very important. The notification which is giving the list of services which are liable to be taxed under reverse charge is notification number 13/2017. What is this notification telling? There are few services which are very important. I'll just give a brief of the items which are covered under reverse charge. GTA, a goods transport agency is opting to pay tax at 5% supplying services to 7 notified persons, RCM is applicable. Legal services provided by an advocate to a business entity, arbitral tribunal providing services to a business entity, sponsorship services provided by any person to a partnership firm or a body corporate, then government giving any types of services to a business entity, renting of immovable property services given by government to a registered person, transfer of development right, etc. Then director of a company is giving services to the company. Please note, transfer of development right, all these are not so important, so I am not focusing. Director of a company is giving services to the said company or body corporate, important. Agent related services, insurance agent, recovery agent, etc. they are giving respective services, RCM is applicable. Then MAD services, musical, artistic and dramatic services given by any person to a producer. Then author is publishing a book. Author has two options. He has an option to pay the taxes under forward charge. For that he will have to take a registration under GST law, or he has an option to pay the taxes under reverse charge, wherein the publisher will have to pay the taxes. Then security services, important services. Any person who is supplying security services, any person other than a body corporate who is supplying security services to a registered person, the registered person will have to pay the taxes under reverse charge. Then renting of motor vehicle services provided by any person, renting of motor vehicle services provided by a person who is opting to pay tax at 5%, any person other than a body corporate to body corporate. So if renting of motor vehicle services is provided by a person who is opting to pay tax at 5%, renting of motor vehicle, just like GTA, renting of motor vehicle also, they have two options. They have an option to pay tax at 5% and 12%. So if a person is renting in the business of renting of motor vehicle and he has opted to pay the taxes at 12% and he is giving services to a body corporate, then only RCM is applicable. So the supplier can be any person other than a body corporate. The recipient is always a body corporate. Section 9 subsection 4. Section 9 subsection 4 is also talking about reverse charge, but there is a huge difference between 9.3 and 9.4. 9.4 says, I am going to give you the list of goods and services. If these goods and services are purchased by this particular registered person, they are going to give the list of goods and services, and also this they are going to specify the registered person. If these goods and services are procured by this registered person from an unregistered dealer, from whom? From an unregistered dealer, then the notified registered person will have to pay the taxes under reverse charge. Now only one person has been notified here presently, that is the person who is involved in the business of construction. Notified persons are the persons engaged in the business of construction. And what are the notified goods and services, sir? They are normally the goods which are used in the construction business, like cement, capital goods which is used for construction business, TMT bars, etc. Then section 9 subsection 5, again an important section. Section 9 subsection 5 talks about what? Supplied through an e-commerce operator. This section 9 subsection 5 says, if notified services are supplied through an e-commerce operator, the tax on that supply is required to be paid by e-commerce operator. Sir, what if the e-commerce operator does not have physical presence in India? If the e-commerce operator does not have physical presence in India, then any person who is representing that e-commerce operator in India, that is taxable territory, will have to pay the taxes. Sir, what if there is no representative of e-commerce operator in India, sir? If the e-commerce operator does not have a physical presence in taxable territory and he does not have a representative in India, then he will have to appoint a person in India to pay such taxes. Sir, what do you mean by e-commerce operator? E-commerce operator means any person who is owning, operating, maintaining and managing an electronic platform for electronic commerce. Sir, what are the services notified under section 9.5 for payment of by the e-commerce operator? They are transportation of passenger services, accommodation in hotel in guest house services and housekeeping services. Then section 10. Section 10 talks about what? Section 10 talks about composition levy. Section 10 talks about what, sir? Section 10 talks about composition levy. Composition levy. Section 10 subsection 1 talks about eligibility. Who is eligible to become a composition dealer? A registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crore rupees can opt to pay the taxes at composite rates in lieu of tax payable by him under section 9 subsection under section 9. So instead of paying the tax under section 9, you can opt to pay the tax under section 10, that is the composite rates. What are the composite rates? If you are a manufacturer, then it is 0.5% of turnover in a state, 0.5% CGST, 0.5% SGST. If you are a restaurant or outdoor catering service provider, it is 2.5% of turnover in a state, 2.5% CGST, 2.5% SGST. Effective it is 5%. If you are a trader, then it is 0.5% of taxable turnover in a state, 0.5% CGST and 0.5% SGST. Now this limit is 75 lakhs for 8 special category states. Sir, which are these 8 special category states for which the limit is 75 lakhs? Num must. N for Nagaland, U for Uttarakhand, M for Manipur, M for Meghalaya, M for Mizoram, A for Assam, S for Sikkim, and T for A for Arunachal Pradesh, not Assam, A for Arunachal Pradesh, S for Sikkim, and 3 for Tripura. For this num must, the limit is 75 lakhs. So if you are doing business in these special category states, for you the turnover limit will be 75 lakhs for composition scheme. Sir, what do you mean by aggregate turnover? Aggregate turnover means aggregate value. Aggregate value means the total value of all taxable supplies, exempt supplies, export of goods or services, supply made to a person having same PAN. This aggregate turnover is required to be computed on all India basis or PAN India basis, meaning how much ever businesses you are doing under a single PAN, all the different types of registrations which you have under single PAN, all the different types of business which you have under single PAN, all the different types of branches which you have under a single PAN, all the turnover, all the different branches, the business turnover is required to be included in computation of aggregate turnover. Whenever you are computing aggregate turnover, please do not include the taxes under GST law and inward supply liable for reverse charge. Now this particular section 10 subsection 1, I'll repeat. Eligibility. Who is eligible? A registered person is eligible to opt for composition scheme if his aggregate turnover in the preceding financial year did not exceed 1.5 crore rupees and 75 lakhs for 8 special category stay. He can opt to pay tax at composite rates in lieu of tax payable by him under composite rates, in lieu of tax payable by him under section 9. There are 2 provisos. This limit can be increased up to 2 crores, and a person who is opting to pay tax at under section 9 can also supply services. How much services? Services equal to 10% of turnover in the state or union territory or rupees 5 lakhs, whichever is higher. Services equal to 10% of turnover in the state or union territory or rupees 5 lakhs, whichever is higher. Conditions. Section 10 subsection 2 talks about conditions. If you want to become a composition dealer as per section 10, then what are the conditions which are required to be followed by you? You should not supply services other than those mentioned in section 10 subsection 1. So normally a service provider cannot become a composition dealer under section 10 subsection 1. So if you are supplying services, then that should be within the limit if given in the second proviso. Then you should not supply services except those mentioned in section 10 subsection 1. You should not make non-taxable supplies. You should not make an interstate outward supply. You should not supply through an e-commerce operator who is required to collect the taxes under section 52. You should not manufacture notified goods, and you should not be a casual taxable person and non-resident taxable persons. These are totally 6 conditions. There is one proviso which says if there are more than one registered person under a single PAN, if there are what? If there are more than one registered person under a single PAN, if one is opting for composition scheme, others also should opt for composition scheme. If one is opting for composition scheme, others also should opt for composition scheme. There is a new section which has been introduced. It was introduced last year only. Section is section 10(2)(a). This talks about composition scheme for service provider, which says if you are a person who is not eligible to become a composition dealer as per section 10 subsection 1, if you are a person who is not eligible to become a composition dealer as per section 10 subsection 1, and your aggregate turnover did not exceed 50 lakh rupees in the preceding financial year, then you can opt to pay tax and at composite rates under section 10 subsection 2a, wherein the rate applicable to you will be 6%, that is 3% CGST and 3% SGST. Sir, are there any conditions applicable to him? Yes, all the conditions which were applicable to a normal composition dealer are also applicable to him. They are also applicable to him, except that supply of services condition. Then section 10 subsection 3, the composition scheme shall lapse in the current financial year once your aggregate turnover crosses the limit of 1.5 crores or 75 lakhs or 50 lakhs. Section 10 subsection 4, a composition dealer cannot issue tax invoice and he cannot take input tax credit. Section 10 subsection 5, show cause notice will be issued by the proper officer if you are contravening the provisions of section 10. Meaning, if a registered person has opted for a composition scheme though he is not eligible, or he has contravened any of the provisions of section 10, then a notice will be issued to him. A show cause notice will be issued to him. He will have to reply to that notice. If the reply is satisfactory, very good. If reply is not satisfactory, then provisions of section 73 and 74 will also be made applicable. Rule number 5. Rule number 5 talks about what? Rule number 5 talks about other conditions. What are the other conditions? Casual taxable person and non-resident taxable person cannot become a composition dealer. If a composition dealer is taking any services which are taxable under 9.3 and 9.4, then he will have to pay taxes at normal rate for those goods or services. Meaning, for all the inward supply liable to reverse charge, he has to pay the taxes at regular rates only. Then a composition dealer will have to display composition taxable person on the notice board and the sign board displayed at his business premises, and he'll also have to display composition taxable person not eligible to collect the taxes on the bill of supply which will be issued by him. And other points with regard to composition scheme is he is required to file return yearly once, which the return which he has to file is GSTR 4. The due date of filing this return is 30th April of next financial year, and he has to make the payment of taxes on quarterly basis by using the form called as GST CMP 08. The due date of payment of taxes is 18th of next month following the quarter, 18th of next month following the quarter. So this is all about your composition scheme. Section 10. Section 11 talks about exemption. Section 11 subsection 1 general exemptions. They are issued by way of notification. They can be absolute or conditional, and it will be applicable to everyone. Section 11 subsection 2 special exemptions. They are given by way of special order. They will be applicable only to the person who is seeking it. And section 11 subsection 3 talks about explanation to an exemption. Government has all the power to give an explanation to whatever exemptions they have already issued. This explanation, if it is issued within 1 year of that exemption notification or exemption order, then that will be applicable retrospectively from the date of exemption notification or exemption order. Section 12, 13, 14 talks about time of supply. Section 12, 13, 14 talks about what? Time of supply. Section 12 talks about what's the time of supply of goods. In case of goods, when are you liable to pay? Section 12 subsection 1 says the liability to pay tax in case of supply of goods shall be as per the time of supply determined under section 12. Section 12 subsection 2 talks about forward charge. In case of forward charge, 2 arrow marks. Check whether the invoice has been issued within the due date or not issued within the due date. If the invoice has been issued within the due date, date of invoice or date of payment, whichever is earlier. If invoice is not issued within the due date, date of last date to issue invoice or date of payment, whichever is earlier. Sir, what is the date of payment, sir? What is the last date for making the payment? If the supply which you are making involves movement in goods on or before removal, the invoice is required to be issued. If the supplier which you are making does not involve movement in goods, then on or before delivery, the invoice is required to be issued. If you are if it is a case of continuous supply of goods, successive payment dates or successive statement date, whichever is earlier. If it is a case of sale on approval basis, the invoice is required to be issued on the date of approval or 6 months from the date of removal, whichever is earlier. Now there is also a notification number 66/2017, which says you don't have to make any payment of taxes for advances if you receive any advances for supply of goods. For supply of goods, if you are receiving any advances, then for receipt of that particular advance, you don't have to make the payment. In the simple words, the date of payment can never become time of supply for supply of goods. Then section 12 subsection 3. Section 12 subsection 3 talks about time of supply for revert charge of goods. What is the time of supply, sir? The time of supply is date of payment or date of making the payment or last day to the date of receipt of goods or 31 days from the date of supplier invoice or any other document issued by him, whichever is earlier. Section 12 subsection 4. Section 12 subsection 4 is with respect to vouchers. In case of voucher, what is the time of supply, sir? Vouchers can be of two types: supply identifiable voucher, supply not identifiable voucher. If it is a supply identifiable voucher, the time of supply will be date of issue of voucher or date of issue of voucher. If it is a supply not identifiable voucher, then the time of supply will be date of redemption of voucher. Then section 12 subsection 5 talks about residual provision. If you are not able to find the time of supply as per any of the above provision, then the time of supply, if you are a person who is liable to file the returns, then the due date of filing return will become the time of supply. In all other cases, the date of making the payment of taxes will become the time of supply. Then section 12 subsection 6 talks about addition in the value of supply. If there is any addition in value of supply because of interest payment or late fee payment or any other penalty which you have paid for delayed payment of consideration, then for that amount the time of supply will be the date of receipt of that particular amount. Then section 13, time of supply of services. For time of supply of services, again section 13(1), 13(2), 13(3), 13(4), 13(5), 13(6). Section 13 subsection 1 says the liability to pay tax for supply of services shall be the time of supply as determined under section 13. Section 13 subsection 2 talks about time of supply for services. Section 13 subsection 2 says if the invoice has been issued within the due date, the time of supply will be date of invoice or date of payment, whichever is earlier. If invoice is not issued within the due date, the time of supply will be last date to issue invoice or date of payment whichever is earlier. Here last date to issue invoice is nothing but the date of completion. Whenever the date, not last date to issue invoice, better you read it as date of completion. So for services, if the invoice has been issued within the due date specified under section 31, date of invoice or date of payment whichever is earlier. If invoice has not been issued within the due date, then date of completion or date of payment whichever is earlier. Sir, what do you mean by date of payment, sir? For both goods and services, date of payment means book entry date or bank credit date whichever is earlier. Sir, what do you mean by this? The date on which the entry has been made in the books of accounts or the date on which the amount is getting credited to the bank account whichever is earlier. Sir, what is the last day to issue invoice as per section 31 for services? For normal cases, on or before completion or within 30 days of completion, you are required to issue the invoices. And for the case of continuous supply of services, if the due date of payment is ascertainable from the contract, on or before that date. If the due date of payment is not ascertainable, then on or before date of receipt of the payment. And if the payment is linked to completion, on or before the completion, the invoice is required to be issued. For reverse charge, sir, for reverse charge of services, the time of supply is date of making the payment or 61 days from the date of supplier invoice or any other document issued by the supplier whichever is earlier. Sir, in case of vouchers for services, again same for vouchers. Whether it, section 13 subsection 4 vouchers, if it is a supply identifiable voucher, date of issue of voucher. If it is a supply not identifiable voucher, date of redemption of voucher will be the time of supply. Sir, residual cases, section 13 subsection 5 talks about residual cases. If you are a person who is liable to file the returns, that is if you are a registered person, the due date of filing return. In all other cases, the date of making the payment of taxes will be taken as time of supply. For interest, penalty, late fee, for delayed payment of consideration, the date of receipt of such amount. Then section 14 is applicable for determination of time of supply whenever there is a change in rate of tax. Whenever there is what? Whenever there is a change in rate of tax. Whenever there is a change in rate of taxes, then two possibilities are there. Supply is made before change or supply is made after change. I'll just tell you the crux. See, the date of supply will never become time of supply. Then who will become? Either the date of payment or the date of invoice will become the time of supply. Normally, whoever is with supply will become time of supply. If the date of invoice is with date of supply, then the time of supply will be date of invoice. If payment is with supply, then the time of supply will be date of payment. Sir, if both are with supply, sir, then that is if all the three are together, then date of invoice or payment whichever is earlier. If both of them are not with supply, date of invoice or date of payment whichever is earlier. This is the crux of this particular discussion. Then value of supply. Value of supply. Section 15 talks about what? Section 15 talks about value of supply. Section 15 talks about what, sir? Section 15 talks about value of supply. Section 15 subsection 1 says value of supply is transaction value. Section 15 1 says what, sir? Value of supply is transaction value. What do you mean by transaction value? Transaction value is the price actually paid or payable, where the supplier as well as a recipient are not related person, and the price which you are paying is the sole consideration or it is the only consideration. Section 15 subsection 2, inclusions in value of supply. There are few things which are required to be included in value of supply. Which are those things which are required to be included in value of supply? All the taxes except taxes under GST. Any payment made by the recipient which the supplier had to incur. Incidental expenses for making the supply. Interest, penalty, late fee for delayed payment of consideration. Subsidy directly linked to the price excluding the subsidy given by central government or state government. Section 15 subsection 3 talks about exclusions from value of supply. What are the different things which can be excluded from the value of supply? Only one thing can be excluded. What is that? Discount. Now discount can be given before or the time of supply. If discount is given before or the time of supply, it can be excluded from value of supply if it is shown separately on the invoice. If the discount is given after supply, it can be excluded from the value of supply if three conditions are satisfied. What are those three conditions? It should be agreed between the supplier and recipient. It should be linked to a specific invoice, and the input tax credit with respect to the discount portion should be reversed. Section 15 subsection 4 says if you are not able to determine the value of supply as per section 15, then please determine the value of supply as per rules. Rule number 27 to rule number 35 talks about valuation. Rule number what, sir? 27 to rule number 35 talks about valuation. So if you are not able to determine the value of supply as per section 15, please determine the value of supply as per rules. Rule number 27 says what? Rule number 27 says if the rule number 27 is applicable when the consideration is not wholly in money. For the supply which you are making, there is a consideration, but the consideration is not wholly in money. In such cases, what will be the value of supply? Value of supply will be open market value. So what if open market value is not there? If open market value is not available, then money plus fair value of other consideration. So what if money plus fair value of other consideration is not available? In such cases, value of supply will be value of like, kind and quality. Sir, what if that is also not there? Then value will be money plus apply rule number 30 or 31 for that other consideration. consideration. Rule number 28. Rule number 28 is applicable whenever you are making a supply where the supply is between related person or between deemed distinct person. What is the value of supply? Open market value. What if open market value is not available? If open market value is not available, value of like kind and quality. What if value of like kind and quality is also not available? Then rule 30, 31 in that order. Then there are two provisos. Proviso number 1 says, in case of supply of goods, the supplier will have an option to take value of supply to be equal to 90% of the amount charged by the recipient. Thus, in case of supply of goods, this is applicable only in case of supply of goods. The supplier has an option to take the value of supply to be equal to 90% of the amount charged by the supplier from his from the recipient from his customer. So, say for example, Priya Sari sold the goods to related person. I sold my goods to my mother-in-law. My mother-in-law sold the goods to some ex-party. So my mother-in-law has charged 12 lakh rupees. I have an option to take 90% of 12 lakh rupees as my value of supply. Then there is second proviso which says the value declared on the invoice will be taken as open market value. The value which is declared on the invoice will be taken as open market value if the recipient is eligible for full input tax credit. So whoever, whichever person you are making the supply, if that person is eligible for full input tax credit, then whatever value is declared on the invoice will be taken as open market value. Then whenever you make a supply to, whenever there is a supply to or by an agent, the value of supply will be open market value or 90% of the amount charged by the agent from his customer who is not a related person, or apply rule number 30, 31 in that order. Sir, what is this rule number 30? Rule number 30 talks about cost-based valuation. It says value of supply will be 110% of cost of acquisition, cost of provision of services, or cost of procurement, or cost of production. So value of supply will be what? So you find the cost and add 10% to that. Rule number 31. Rule number 31 is residual rule, which says rule number 31 will be applicable only if all the above rules are not applicable. Say if you are not able to find the value of supply as per rule number 27 to rule number 30, then please use rule number 31 for finding the value of supply. What is rule number 31 telling? Rule number 31 says the value of supply is required to be found by applying the provisions of section 15 consistently and reasonably. Then rule number 31A is applicable for lottery, betting and gambling. For lottery, the value of supply is how much, sir? The value of supply is face value of lottery ticket or the prize money into 100 divided by 128. Normally, whatever face value means what, sir? Whatever lottery ticket is there, that will have a price. Say there is a lottery of 1 crore rupees, and if you want to purchase this lottery ticket, you will have to give 100 rupees. So this 100 rupees is nothing but face value. Normally this 100 rupees is inclusive of GST. This 100 rupees is inclusive of GST. You should exclude the GST part, which will give you value of supply. So what is the GST rate applicable for lottery tickets, etc.? 28%. So whatever face value of lottery ticket is there into 100 divided by 128 will give you value of supply. It will give you value of supply. Sir, what in case of betting, gambling and etc., sir? Value of supply is 100% of the amount paid to the totalister, which is nothing but the amount of bet which you are putting. Then rule number 32. What is rule number 32 talking about? Rule number 32 has several sub rules in it. Rule number 32 sub rule 1 says whatever you are going to see in rule number 32 is just an option. It is not compulsory that you should follow this particular rule. It is just an option given to all these different kind of person. Rule number 32 sub rule 1 talks about a forex dealer or a money changer. A foreign exchange dealer or a money changer has two options. He has option A and option B. What are these two options? Now I'll just open the chart material for quick discussion. Dig. Rule number 32. Rule. Yeah. So a forex dealer or a money changer has two options. Forex dealer or money changer has two options. Option 1, under option 1, again there are two bifurcations. Check whether the currency which you are exchanging involves Indian rupees or it does not involve Indian rupees. If it involves Indian rupees, then check whether RBI rate has been specified or RBI rate is not specified. If RBI rate is specified, then the value of supply will be RBI rate minus the currency exchange rate into number of units exchanged. If RBI rate is not specified, then find the rupee value of currency exchange into 1% will be the value of supply. Sir, what if the amount which I am exchanging what if the currency which I am exchanging does not involve Indian rupees at all, then rupee value of currency bought, compare it with rupee value of currency sold, whichever is less into 1% will be the value of supply. Sir, what is the option 2? Option 2 is slab based. It is slab based. Value of supply, if you are exchanging up to rupees 1 lakh, the value of supply will be 1% of gross currency exchange or rupees 250, whichever is higher. If you are exchanging somewhere between 1 lakh to 10 lakh, value of supply will be 1000 plus 0.5% of gross currency exchange above rupees 1 lakh. If you are exchanging anything more than 10 lakhs, then 5500 plus 0.1% of gross currency exchange above rupees 10 lakhs or rupees 60,000, whichever is less, or rupees 60,000, whichever is less. Then rule number 32 sub rule 3 is applicable for a air travel agent. Air travel agent has two options. He can do two types of booking: domestic booking or international booking. If it is a domestic booking, 5% of the base fare will be value of supply. If it is an international booking, 10% of the base fare will be the value of supply. Please note, base fare is not the ticket price. See, the ticket price which you are paying, say from Bangalore to Delhi, if I want to go, 6,000 rupees is the ticket price. This will be divided into various different categories. Base fare may be 3,000 rupees. Airport development fees will be say 1,500 rupees. There will be fuel surcharge etc. of say 500 rupees. There will be some taxes which will be which they will be collecting etc. of say 1,000 rupees. Now on this base fare only, base fare into 5% will be taken as value of supply for air travel agent. Then life insurance business. Life insurance business can make three types of policy: investment policy, single premium policy, or risk policy. If it is a risk policy, value of supply will be what? Value of supply will be gross premium paid. Whatever premium you are paying, that entire amount will be taken as value of supply. If it is single premium policy, what happens? You pay premium only once. If it is a single premium policy, value of supply will be 10% of the single premium charge. If it is an investment policy, then two possibilities are there. The amount which is allocated towards investment is intimated to you, or the amount allocated towards investment is not intimated to you. If the amount allocated towards investment is intimated to you, value of supply will be gross premium charge minus amount invested. If amount allocated toward investment is not intimated to you, then for the first year it is 25% of gross premium charge. For the subsequent years, that is from second year premium onwards, it is 12.5% of gross premium charge. Then rule number 32 sub rule 5 is applicable for second hand goods. For second hand goods, what is the value of supply? For second hand goods, the value of supply is selling price minus purchase price. It is what, sir? Selling price minus purchase price. Now two possibilities are there. You can be a dealer of second hand goods, or it is a case of repossession of second hand goods. Now if you are a dealer of second hand goods, what is the value of supply? Selling price minus purchase price. If you are a repossessor of second hand goods, what is the value of supply? It is also selling price minus purchase price. Sir, what do you mean by repossessor? Normally banks are called as repossessor, or any person who has given loan for the purchase of a car etc. or bike etc. Now if he is not paying loan amount to me, then I will take the possession of the car. So that will what will happen in case the possession was available with that particular driver of the car, now it is coming back to the bank, so it is repossession. In that case also, value of supply is selling price minus purchase price only. What happens over here? You are required to compute the purchase price. Purchase price is actual purchase price of this car minus depreciation. How much is the depreciation? 5% per quarter or part thereof from the date of purchase till the date of sale. Now if you want to apply rule number 32 sub rule 5, there are two conditions which are required to be satisfied by you. You cannot take input tax credit on the purchase of the car, and the goods should be supplied as such without making any changes. Goods should be supplied as such without making any changes. Sir, what will be the value for rule number 32 sub rule 6 talks about value of coupons and vouchers. Sir, what will be the value for coupons and vouchers? The value for coupons and vouchers will be the money value of the goods and services which can be purchased by you. See, the vouchers are just small papers. What will be the value of that paper? Normally, if you, the paper value may be only 10 rupees, 15 rupees or 100 rupees. But by using 1000 rupees vouchers, I can purchase product up to 1000 rupees. So what will be the value of that voucher, sir? The value of that vouchers will be 1000 rupees. The value of the voucher will be what, sir? The money value of goods and services which can be procured by you. Then pure agent. Rule number 33 says, if any expenditure is incurred as a pure agent, then the value of that expenditure shall not be added in value of supply. If, say for example, I am providing services to one of my client, I am filing his income tax return. Now I purchase a digital signature on my client's behalf. I am acting as a pure agent of my client and I am purchasing a digital signature on his behalf. In this case, whatever amount I have incurred for the digital signature is not required to be added in value of supply if I am acting as his pure agent. If I am acting as his pure agent, then the value of that expenses will be excluded from value of supply. Sir, what is the exchange rate which I have to take whenever I am supplying the goods outside India? What is the exchange rate I have to take? If it is the case of goods, then as per CBIC. If it is a case of services, then gap rate, whatever is agreed between the supplier and recipient. Rule number 35 says, if the amount which is given to you is inclusive of GST, then the tax amount, if you want to compute, this is the formula: the total amount into GST rate divided by 100 plus GST rate. Rule number section 15 subsection 5 talks about says, if you in some cases government is going to determine the value of supply. Government is going to specify you how to do value of supply. You should follow whatever is told by government. Then section 16, 17, 18, 19, 20 and 21 talks about is with respect to input tax credit. It is with respect to what, sir? Input tax credit. Section 16 talks about what? Section 16 talks about eligibility. Who is eligible to take input tax credit? Every registered person can take input tax rate on goods or services or both which is procured by him, which is supplied to him, if it is used or intended to be used in the course or furtherance of his business. Section 15 subsection 2 conditions for section 16 subsection 2, not 15 2, section 16 subsection 2 conditions for taking input tax rate. There are totally 4 conditions. The registered person should have possession of tax invoice, debit note or any other tax paying document. He should have actually received the goods or services. However, there is an explanation which says actual receipt is not necessary in case of bill to ship to concept, meaning it says, the explanation says, see, first condition is what? I'll tell the 4 conditions first. He should be, the registered person who is taking input tax credit should be in possession of tax invoice, debit note, credit note. He should have actually received the goods or services. The supplier should have paid the taxes and he should have filed his returns for taking input tax credit. Now for the second condition, what is the second condition? He should have actually received the goods or services. There is an explanation. That explanation says, where the goods are supplied by the supplier to a recipient on the direction of registered person. Where the goods are supplied by a supplier to the recipient on the direction of registered person, it will be deemed that the registered person has received the goods or services once it is received by the recipient. Say for example, there is Priya Saris, Karina Saris and Anushka Saris. Priya Saris is in Bangalore, Karina is in Mumbai, and Anushka is in Mysore. Now Karina has told me to supply the goods directly to Anushka. I am giving the bill to Karina. Payment is also made by Karina only, but the delivery is happening in Mysore. So who can take input tax credit, Anushka or Karina? Karina can take input tax credit. Okay, where the supplier has supplied the goods to a recipient, that is Anushka, on the direction of a registered person, then it will be deemed that the registered person has received the goods or services once it is received by the registered person, that is the recipient. Okay, then there are provisos also. There are provisos. What are those provisos telling? If the goods are received in lots or installment, ITC can be taken upon receipt of last lot or last installment. Then no input tax credit can be whatever input tax credit is taken by you is required to be reversed if the payment is not made to the supplier within 180 days. Within 180 days of what? Within 180 days from the date of invoice. Interest rate is what, sir? Interest rate is 18% per annum. Interest is required to be computed from the date of taking the credit till the date of reversal of the credit. Section 16 subsection 3. ITC in respect of capital goods. In respect of capital goods, input tax credit under GST law, input tax credit can be taken by you on capital goods also. However, ITC will not be allowed on capital goods if input tax credit will not be allowed on capital goods if depreciation is taken on the tax component of that capital goods. No input tax credit will be allowed on the capital goods if the depreciation is taken on tax component of capital goods as per income tax law. Section 16 subsection 4, last date to take input tax credit. The last date to take input tax credit as per section 15 subsection 16 subsection 4 is the date of filing annual return or due date of filing return for the month of September, whichever is earlier. September of next financial year. So date of filing annual return for that financial year for which the invoice is pertaining to, or the due date of filing the return for the September month of next financial year, whichever is earlier. Rule number 36 is there. Rule number 36 talks about various different points. One of that point is other document based on which you can take input tax credit is your RCM invoice, bill of entry in case of import of goods, and input service distributor invoices. There are some mandatory details which are required to be present in that particular invoices based on which you are taking input tax credit. Which are those mandatory details? Tax amount, description of goods or services, value of supply, then GST number of supply and recipient, and the place of supply details in case of interstate supply. Now, ITC on the invoice uploaded by the supplier will be restricted to 5%. Now there is restriction. Rule number 36 sub rule 4, very beautiful rule. It says there is a restriction on taking input tax credit if the supplier has not uploaded. Normally whatever sales is made, the details of that sales is required to be uploaded in GSTR1. If I upload my GSTR1, my recipient will get that information in his GSTR2A or GSTR2B. In both the cases he gets the GSTR2A and 2B, both the places he gets the information. Now if I don't upload the invoices of the sales which is made, the recipient will obviously not get the details in his GSTR2A or 2B. So there will be a restriction. What is that restriction? Restriction will be 5% of eligible input tax credit. So ITC on the invoice not uploaded by the supplier shall be restricted to 5% of eligible input tax, the details of which is uploaded on the portal. The details of which is uploaded on the portal. Yeah. Rule number 32 sub rule 4. Yeah. Section 17. Section 17 talks about what? Section 17 talks about apportionment of input tax credit or block credit. Section 17 subsection 1 says if you are using any goods or services for business purpose and any purpose other than business, the ITC shall be restricted to so much of the input tax credit which is attributable to business purpose. 17.2 says where you are using any goods or services for taxable purpose, include taxable supplies including zero rated supplies and exempt supplies, then the ITC which can be taken by you shall be restricted to so much of input tax which can be which is attributable to taxable supplies including zero rated supplies. The exempt supplies which are specified under 17 subsection 2 shall also include the outward supply, supplies which are taxable under revert charge, sale of lands, sale of buildings subject to para 5B of schedule 2, and transaction securities. Section 17 subsection 4. Section 17 subsection 4 says banking company, financial institution, etc., financial institution, NBFCs, etc., they can, instead of following section 17 subsection 2, they can directly follow 17.4. What will happen in such cases? They may, instead of following 17.2, they can follow 17.4, wherein they can take 50% of eligible input tax rate and the other 50% shall lapse. Option 1 exercise should be followed for entire financial year. 17.5 talks about what? Block credit. There are few items on which ITC can never be taken by you, on which ITC is blocked. Which are those items, sir? Motor vehicle which is used for transportation of persons. Motor vehicle which is used for transportation of persons having seating capacity of less than or equal to 13 including driver, except where it is used for 3 cases, that is transportation of passenger, training in motor vehicle, or for transportation of passenger, training in motor vehicle, or it is used for I am forgetting that particular word only. If it is used for further supply of that motor vehicle, further supply can be, say, I am a person who is dealer of that motor vehicle, etc. Then ITC cannot be taken by you on vessels and aircraft unless until it is used for transportation of passengers or transportation of goods, or it is used for further supply of that vessels and aircraft, or training in that vessels and aircraft. Sir, can I take insurance input tax credit on insurance, service cost and repairs of motor vehicle, vessels and aircraft? Answer is no, it is blocked. However, if you are allowed to take input tax credit at the time of purchase of motor vehicle, vessels and aircraft, then ITC will be allowed on the service cost also, repairs and maintenance also. Then ITC is blocked on foods, beverages, outdoor catering, beauty treatment, health services, cosmetic surgery, plastic surgery, renting, leasing, hiring of motor vehicle, vessels and aircraft. ITC is also blocked on membership of health club, fitness center, health and travel benefits extend to employees. However, both the cases input tax credit it can be taken if it is used for the same line of business, or if there is a statutory obligation on the employer to provide the same. ITC cannot be taken on works contract, services, goods or services which is used for construction of an immovable property except plant and machinery. Goods and services which are taxed under section 10, you cannot take input tax credit. Goods and services which are received by a non-resident taxable person, except the goods which is imported by him, and goods or services which are destroyed, written off, given as free samples, etc., etc., cannot be taken by you. Section 18 talks about what? Section 18 talks about input tax credit in special circumstances. 18 talks about what, sir? Input tax credit in special circumstances. What will happen to your input tax credit in special circumstances? There are some special circumstances. Say for example, you are a person who is liable for registration and you have applied for registration within 30 days. You will be allowed to take input tax credit on inputs which is held in finished goods, work in progress, raw materials, etc., which is available with you one day prior to the date of liable for registration. So whatever inputs you have one day prior to the date of liable for registration, you can take input tax credit on those inputs. Section 18 subsection 1 clause B, if you have applied for registration on a voluntary basis, you will be allowed to take input tax credit on inputs available with you one day prior to the date of grant of registration. Section 18 subsection 1 clause C says if you are a composition dealer and if you are converting yourself to a regular dealer, you will be allowed to take input tax credit on inputs as well as capital goods. If you are a composition dealer who is converting converting himself to a regular dealer, you will be allowed to take input tax credit on inputs as well as capital goods which is held by you one day prior to the date of liable for one day prior to the date of change, that is opting from composition scheme to regular scheme. On capital goods, whatever ITC is there, that will be reduced by 5% per quarter or part thereof. Then, if a registered person's exempt supply is becoming taxable supply, I am a registered person who was dealing in exempt supply, now they have become taxable supplies. In such cases, you will be allowed to take input tax credit on inputs as well as capital goods which is exclusively used for making that exempt supply, which is available with you one day prior to that particular change. Section 18 subsection 2 says no ITC will be given you under section 18 subsection 1 for invoice older than 1 year. Section 18 subsection 3 says whenever there is a change in constitution of business of a registered person, that is amalgamation, merger, demerger, sale of business or death of sole proprietor, etc., then the new entity will be allowed to take input tax credit. The new entity can take input tax credit provided that the liabilities of old company should also go to the new company. Section 18 subsection 4, if a regular dealer is becoming a composition dealer or if the taxable supply is becoming exempt supply, then whatever input tax is available with you, that is required to be reversed. ITC on the stocks is required to be paid by you, and also on the capital goods which was exclusively used for making that exempt supply or which is used by the composition dealer is required to be reversed. On capital goods, ITC is required to be reduced by 5% per quarter or part thereof. Section 18.5 talks about rules for 18.1 and 18.4. Section 18.6, very beautiful, very important. Supply of capital goods or plant and machinery. Whenever you supply a capital goods or plant and machinery, you are required to pay some taxes. ITC which is taken by you already on this capital goods or plant and machinery is required to be paid back by you. What is required to be paid by you, sir? Tax computed on the transaction value, that is the value of supply of that particular capital goods or plant and machinery as determined under section 15, or compare that with the tax on the purchase price of that particular capital goods. Whatever tax you have paid, the input tax rate which you have taken at the time of purchase of that capital goods or plant and machinery, reduce it by 5% per quarter or part thereof from the date of purchase till the date of sale. Compare that tax on your sales with this input tax rate which is available. Compare both of them. Whichever is higher is required to be reversed by you. Section 19. Section 19 talks about what's the input tax rate in case of job work. Section 19 subsection 1 says principal can take input tax credit on inputs which is supplied by him to the job worker for the purpose of job work. Section 19 subsection 2 says the principal can also take the input tax credit on the goods which is directly supplied by the supplier to the job worker for the purpose of job work. The only condition is that section 19 subsection 3 talks about this condition. Whatever inputs which is sent by the job worker to which is sent by the principal to the job worker or by the supplier directly to the job worker should come back to the principal within 1 year from the date of sending, or within 1 year from the date of receipt, or it should be sold from his location within the period of 1 year. Section 19 subsection 4, 5, 6 talks about capital goods. Principal can take input tax credit on capital goods which is sent by him to the job worker. Principal can also take input tax credit on capital goods which is directly sent to the job worker. Principal, this capital goods should come back to the principal within a period of 3 years from the date of supply. Sir, what will happen if I don't get these goods within 3 years or within 1 year? Then it will be deemed as supply. Whatever supply is made by principal to the job worker, it will be treated as sale, and accordingly we will have to pay the taxes. Section 20 talks about distribution of input tax credit by input service distributor. Input service distributor can distribute the ITC which is available with him to his other establishment. This distribution is based on the input service distributor invoices, and for making this distribution he is required to give a document called as input service distributor invoices. He can distribute CGST as CGST or IGST and IGST as CGST, IGST. Now, how is the distribution happening, sir? If the ITC is with respect to a single recipient, then it is required to be distributed only to that single recipient. If the ITC is for more than one recipient, it is required to be distributed to those recipients on the basis of their turnover of relevant period. If the ITC is in respect of it is attributable to all the registered person, then it will be distributed to all those registered person based on their turnover in the relevant period. Turnover of relevant period means what's the turnover of last financial year. If turnover of last financial year is not available, then the turnover of last quarter for which the details is available. Section 21 says, if excess distribution of input tax credit has happened, if there is any excess distribution of input tax credit by the input service distributor, then he should recover the same, that the same will be recovered along with interest at 18% per annum. Section 22. Section 22 talks about what? Section 22 talks about registration. Section 22 to section 30 talks about registration. Section 22 talks about persons liable for registration. Section 22 has totally 4 sections. Section 22 subsection 1, 2, 3, 4. Section 22 subsection 1 is very important, which says a supplier of goods or services will have to take registration in that particular state or unitary from where he is making taxable supply of goods or services if his aggregate turnover crosses 20 lakh rupees. This limit is 10 lakh rupees for 4 special category states, which are this: Make My Trip to Nagaland, that is Nagaland, Tripura, Meghalaya, Manipur and Mizoram. For these 4 special category states, the limit is how much, sir? 10 lakhs instead of 20 lakhs. Then there is a notification number 10/2019, which has given increased limit. It says, if you are a person who is exclusively supplying goods and if your aggregate turnover does not exceed 40 lakh rupees, then you are exempted from taking registration. You are exempted from taking registration if you are supplying goods only and your aggregate turnover does not exceed 40 lakh rupees. There are some conditions. What are the conditions applicable? Sir, what are the conditions applicable? The conditions are, she should not be liable for compulsory registration under section 24. He should not be supplying notified goods, that is ice cream, pan masala, tobacco products. If he has opted for voluntary registration and if he wishes to continue that registration, he can always continue that registration. And this particular provision is not applicable to Nam Mast time pass. It is not applicable, meaning 40 lakh limit is not there for Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim, Tripura, Telangana and Puducherry. For these states and union territories, this particular limit is not applicable. Then persons not liable for registration. Section 23 talks about what, sir? Persons not liable for registration. Who are the different persons who are not liable for registration? If you are a person who is making non-taxable supplies, you are not liable for registration. If you are making supplies which are exempt, you are not liable for registration. If you are making supplies which are taxable under reverse charge, not liable for registration. Then if you are an agriculturist who is supplying whatever is cultivated by you, whatever is produced by you out of cultivation of land, you are not liable for registration. Section 24 talks about compulsory registration. It has given list of persons who are liable to take registration under GST law compulsorily. Who are these persons? Person making interstate taxable supply of goods. Then casual taxable person, person paying the taxes under who is liable to pay the tax under reverse charge. E-commerce operator, non-resident taxable person. Then TGS person, TCS person, casual taxable person and OIDR service provider. These are the persons who are required to take registration under GST law compulsorily. Section 25 talks about procedure for registration. Any person who is liable for registration should apply for registration within 30 days of becoming liable. A casual taxable person and non-resident taxable person should apply for registration 5 days prior to the date of liable for registration. The form which is used for registration is GSTR, form GST REG01. GST REG01, it has 2 parts, part A and part B. Now, other provisions with regard to procedure for registration is, I should apply for registration within 30 days of becoming liable. Casual taxable person and non-resident taxable person can apply for registration within 5 days prior to the commencement of business. If you have a place of business in special category state, for that special category state, you should take compulsorily separate registration. Normally, single registration for entire state and union territory is can be taken by you. But if you have multiple places of business, then you can apply for separate registration. That is purely on your own discretion. Then PAN is compulsory for taking registration and meaning if you want to apply for registration, then the PAN number is very important. For TDS person, TAN is required instead of PAN. And sir, what if I am a non-resident taxable person? For you, other documents are there. You will have to give your self-attested passport copy and other documents. Say if you are already registered in your state in any law, any tax law, etc., you will have to give the tax identification number, and you will have to appoint a person in India who will act as your authorized representative, who should be having a valid PAN. Section 25 talks about deemed registration. If you have taken registration under SGST Act or under UTGST Act, that means you have also given a registration under CGST Act, meaning the registration is not based on the Act, it is based on a particular state. Then special provisions applicable to a casual taxable person and non-resident taxable person, section 27, beautiful section, important section. A casual taxable person and non-resident taxable person has to apply for registration 5 days before commencement of business. His registration will be valid for 90 days or number of days applied for, whichever is earlier. Now he will have to make the payment of taxes in advance, meaning at the time of applying for registration he will have to estimate his tax liability and accordingly pay the taxes. He will have to accordingly pay the taxes in advance. Sir, can I do the extension? Can a casual taxable person and non-resident taxable person extend his registration? Yes, he can extend the registration only once. He can extend it to a maximum period of 90 days. Then section 28 talks about amendment in registration. Now whatever changes, if there is any change in the details which is already submitted by you, at the time of taking registration I would have given some details, my business name, address, etc. If there is any change in that particular details, then I will have to amend my registration. This amendment is required to be normally done within 15 days of that particular change. Amendment can be of two types: amendment in core fields and amendment in non-core fields. If it is an amendment in core fields, then it is required to be approved by the proper officer. Normally once you apply for amendment, officer will take around 15 days period of time for approval. Then section 29 talks about cancellation of registration. Cancellation of registration. Registration can be cancelled by proper officer, registered person himself, or by the legal heirs of registered person. Officer will cancel the registration. I as a registered person can cancel the registration, or the proper officer can cancel the registration, or the registered person himself can cancel. My legal heirs of a registered person can cancel the registration in 3 cases. What are those 3 cases, sir? Those 3 cases are: if my business is discontinued, I was carrying on my business, now I am closing my business, I can cancel my registration. If there is a change in constitution of business, conversion of business from a partnership to a private limited company, or private to limited company, or a sole proprietorship to partnership firm, then also registration will be, whenever there is a change in constitution, I will have to cancel my old registration, or I am no longer liable to take registration under GST law, I can cancel my registration. Then cancellation by proper officer. Proper officer. In these cases, only the officer has the power to cancel registration. Which are those cases? If I have contravened the provisions of GST law, that is, or rule number 10. Then if I am paying the taxes under section 10 and I have not made the payment of taxes continuously for 3 quarters. If I am normal registered person, I have not filed my returns for continuously 6 months. If I have taken for voluntary registration, I have not commenced my business for within a period of 6 months from the date of applying for registration. And if I have obtained the registration by way of fraud, willful misstatement, or suppression of fact. In these cases, who can cancel your registration? Only proper officer can cancel the registration. Sir, what are the examples for violation of provision of law? Say you are taking input tax credit in violation of section 16, or you are violating rule number 86B, or you are taking input tax credit. Your details of GSTR 1 is not matching with details of GSTR 3B. Then section 30 talks about what, sir? Revocation of cancellation. If the officer is cancelling your registration, you can apply for revocation. Revocation is required to be applied within 30 days, and this within 30 days of cancellation of cancellation order which is given by the officer. This can be extended by 30 more days by joint commissioner or additional commissioner, joint commissioner or additional commissioner, and it can be extended by 30 more days by the commissioner. Then tax invoice, debit note and credit note. Okay, now all the theory topics have will come. Tax invoice, debit note and credit note. Sir, when should tax invoice required to be issued? Whenever you are making a taxable supplies, you are required to issue a document called as tax invoice. If you are making taxable supply of goods, then the tax invoice is required to be issued in 3 copies. That is, one for the supplier, one for the recipient, and one for the transporter is going to transport the goods. For services, it is required to be issued in duplicates. The tax invoice, one of the important, there are different contents of tax invoice, such as name of the supplier, GST number of the supplier, name of the recipient, GST number of the recipient, address of the recipient, place of supply details, description of goods, tax amount, GST rate, etc. There are different contents. One of such important content is invoice number. There are few things which is very important to note about this invoice number. The invoice number should maximum be of 16 digit. It should not have any special characteristics. Hashtag, @ dollar symbol, no special characteristics are required to be included. You can have only 2 types of special characteristics. If you want to include any special characteristics, only 2 types of special characteristics, which is hyphen or /. Now, no tax invoice is required to be issued, meaning individual tax invoice will not required to be issued if the value of supply is less than 200 and the supply is made to an unregistered person and that unregistered person does not require any invoice. Instead of that, for all the supply made to an unregistered person, for such kind of unregistered person whose value of supply is more than, whose value of supply is less than 200 rupees, you can give a consolidated tax invoice. Now, e-invoicing provisions have also been made applicable. What happens in case of e-invoicing provisions? If your aggregate turnover, what happens in case of e-invoicing, sir? E-invoicing is a system wherein your B2B invoices, supply made by one registered person to another registered person, is whatever you are generating, that is required to be authenticated electronically on the GST common portal. Under e-invoicing, what will happen? An identification number will be given. Invoice reference number will be given to you for whatever invoice number you have generated against every invoices which is registered on e-invoicing portal. Sir, to whom is this e-invoicing provision applicable? E-invoicing provision is applicable to those types of registered person whose aggregate turnover in the any of the financial year starting from financial year 2017-18 has crossed 100 crore rupees. No invoicing is applicable for government CPICs, government department and local authorities. C for cinema halls and multiplexes, PICs, P for passenger transport service provider, I for insurance company, banking company, G for goods transport agencies, and S for SEZ units. Who is bill of supply? Bill of supply is required to be issued by a person who is making exempt supplies, whose supplies are not taxable, and a composition taxable person. Revised tax invoice. Revised tax invoice are required to be issued for all the supply made by a registered person from the date he was liable for registration till the date of obtaining the registration certificate. Then receipt voucher. Whenever this revised tax invoice is required to be issued within 30 days. Receipt voucher. Receipt voucher. Whenever you receive any advances, as a proof of receipt of that advances, you are required to give a document called as receipt voucher. At the time of receipt of that advances, if it is a case of services, you are also required to make the payment of tax for that advances. Sir, what if I don't know the tax rate? 18%. What if I don't know the nature of supply? It is interstate supply. Refund voucher. You have received any advances, now you are refunding that advances. At the time of refund of that advances, what will you do? You will give a document called as refund voucher. Then payment of payment voucher. Payment voucher. Whenever you are making a payment to the person whose supply are taxable under revert charge. For example, I took services from an advocate. Now, whenever I take services from an advocate, what will happen? I am liable to pay the taxes under revert charge. Now, when I pay the amount to the advocate, I should issue a document called as payment voucher. Credit note. Credit note is required to issue. It is normally issued to decrease the value of the invoice which is already issued by you. Say, for example, tax rate which is shown by you in the invoice is more than the actual tax rate. Actual tax rate is only 5%. You have given the invoice showing the tax rate of 18%. The taxable value is more than the actual taxable value, etc. To reduce the value of supply, you will give the credit note. To increase the value, to increase the value of the invoice, you will give something called as debit note. Sir, can I give? Sir, what if I am making taxable supply as well as exempt supply? You can give a document called as tax invoice cum bill of supply. Then there is one more beautiful document called as Rule 50Y Challan or Delivery Challan. This is required to be issued by you whenever there is a delivery of goods happening for any reasons other than supply. There is no sale but delivery of goods happening, or it can be for reasons other than supply also. Whenever there is a transportation of goods for reasons other than supply, whenever you are sending the goods to a job worker, or whenever liquid gas is transported at that where the quantity is not known at the time of transportation of those goods. Then accounts and records. Accounts and records, normally a registered person has to maintain, every registered person will have to maintain the books of accounts at his principal place of business. All the books of accounts which is recorded maintained by him should be true and correct. These books of accounts should be with regard to production of goods, inward and outward supply, input tax credit, stock related details, output tax related details, etc. If I have more than one place of business, then you can maintain books with respect to those units at those respective places. Can I maintain the books in electronic form? Yes, you can maintain the books in electronic forms also. Whatever books of accounts you are maintaining, they are required to be retained for a period of 72 months. For a period of 72 months from the due date of filing the annual return for that year for which that books of accounts relates to. Then e-way bill. Next is e-way bill provisions. Now, e-way bill is a document which is required to be generated by you whenever you are causing a movement of goods whose consignment value is more than 50,000 rupees. Now, this e-way bill is generated in a the form which is used for generation of e-way bill is form GST EW01, which has two parts, part A and part B. Part A, invoice details, part B is transporters details. Then, sir, can I cancel the e-way bill? Yes, the e-way bill which is generated by you can be cancelled. It cannot be modified, but it can be cancelled within 24 hours of its generation. The validity of e-way bill is for every 100 kilometers or part thereof, it is 1 day. For every 100 kilometers or part thereof, it is 1 day. For vehicles other than over dimension vehicle, if it is an over dimension vehicle, that is very big trucks, then it is for every 20 kilometer and part thereof, it is 1 day. Now, e-way bill can be accepted or rejected within a period of 72 hours. If it is not accepted within 72 hours, that means it is deemed accepted. The validity of e-way bill, can I extend it? Sir, yes, you can extend the validity of e-way bill 8 hours before completion or 8 hours before expiry of the validity. E-way bill cannot be generated by a registered person if a composition dealer has not paid the taxes continuously for 2 quarters, if a registered person has not filed his Gstr 1 or 3B continuously for 2 months. Then there are different types of returns and the due date of filing those returns. There is a return called as Gstr 1. Gstr 1 is a return which is required to be filed by a registered person for the or a casual taxable, regular registered person or a casual taxable person for outward supply which is made by him. Normally the due date is 11th of next month following the quarter, and you can also opt for quarterly. Quarterly it will be 30th or 31st of 30th or 31st of next month following the quarter. Anyways, there is a change. Practically the due date is now 11th of next month. If you are opting for monthly basis, it is 11th of next month. If you are opting for quarterly basis, it is 13th of, not 31st, 13th of next month following the quarter. Meaning, if a person has opted for quarterly filing of GSTR1, for example, Jan to March 22 is a quarter. For this quarter, he is to file the return by 13th of next month following the quarter. Then GSTR2, it is not there. This return is not there. It is a return which was supposed to be filed for giving the details of outward supply. GSTR3 also is not there, but we have something called as GSTR3B. GSTR3B is a summary return wherein you give the details of your outward supply and the details of your inward supply, consolidated details, and accordingly you make the payment of taxes. GSTR4 is a return which is recorded to be GSTR4 is a return which is required to be filed by a composition dealer. It is required to be filed annually by 30th April of next financial year, and payment of taxes is required to be made by him on monthly quarterly basis by using this form GST CMP 08. Due date is 18th of next month following the quarter. GSTR file, return required to be filed by a non-resident taxable person. What is the due date? It is required to be filed on monthly basis 20th of next month or within 7 days from the date of expiry of his registration. GSTR 6, return which is required to be filed by an input service distributor. 13th of next month is the due date. On monthly basis is to file. Then GSTR 7 is a return which is required to be filed by a TDS person. 10th of next month is the due date. It is required to be filed on monthly basis. It is required to be filed on monthly basis. Okay. It is required to be filed on monthly basis. Then we have GSTR 8. This GSTR 8 is a return which is required to be filed by an TCS person. 10th of next month is the due date, and It is required to be filed on monthly basis. GSTR 9 is an annual return for a regular dealer. This is annual return is required to be filed. The due date of annual return is 31st December of next financial year. 31st December of next financial year. Then GSTR 10 is the final return. Once you cancel your registration, you have closed your business, you are required to file a return called as final return. All the registered person has to file this return, and the due date is within 3 months from the date of cancellation. Once your registration is cancelled, within 3 months from the date of your cancellation, you should file this final return. GSTR 11 is required to be filed by UIN holders. They are required to file this return on monthly basis by 28th of next month. Actually, it is on quarterly basis by 18th of next month following the quarter. Late fees, we have discussed the late fee as per the amendment. Basically, it is ₹100 per day, subject to maximum of ₹100. Payment of taxes, there are 3 lectures which you under payment of taxes chapters, you normally discuss about 3 lectures, which is electronic cash ledger, credit ledger, and liability register. In that, what is important is your electronic credit ledger, the manner of taking input tax credit in this particular chapter. I'll just discuss the other points. Output tax liability which is there, whatever output tax liability is there, that can be paid either through taking input tax credit or through cash. Interest liability, if I don't make the payment of taxes within the due date, if I don't file my return within the due date, that means I am not paying the taxes within the due date. If you are not paying the taxes within the due date, you are required to pay that interest. Interest is what, sir? Interest is 18% per annum. Sir, on what amount I should pay the interest? You should pay the interest only on net output tax liability which is payable by you in cash. Say for example, my output tax liability is 10,000 rupees. I have ITC of 15,000 rupees. Should I pay interest? Answer is no. Say for example, your output tax liability is 12,000 rupees and your ITC available is 10,000 rupees. Now you have to pay 2,000 rupees in cash. On this 2,000 rupees, you will also have to pay interest at 18% per annum. And whatever liability you are paying in cash, okay, say normally I have output tax liability is 10,000 rupees, which includes 8,000 rupees on my sales and 2,000 rupees is on my reverse charge basis. Now RCM amount is always required to be paid in cash. I have an ITC of 15,000 rupees. Now sir, should I pay any interest if there is a delay? Yes. On this 2,000 rupees, because reverse charge liability is always required to be paid in cash. On this 2,000 rupees, you'll have to pay interest. Interest liability. Then liability of discharge. Now I have some amount in my electronic cash ledger. How do I use that amount which is there in electronic cash ledger? Whatever amount is there in your electronic cash ledger, that is required to be used in the following manner only. Liability to be discharged only in following order. First, you should use that amount for paying the self-assessed tax and other dues, that is self-assessed tax liabilities, interest and the late fee liabilities of previous tax periods. Then you can use the amount for paying the self-assessed tax and other dues of current tax period. Then if anything is left over, you can use the balance amount for paying any other dues under this particular act, including the liability under 73 and 74. Now one more point I'll discuss. The manner of taking input tax credit. I'll directly go to chart material only. What is the manner of taking input tax credit? I have an input tax credit with me, sir. How do I utilize? The manner of utilization of input tax credit is, if you have IGST credit, first use it for IGST. Then if anything is left over, use it for CGST or SGST in any proportion you want. IGST credit can be used for the purpose of making the payment of IGST first, then use it for CGST or SGST in any proportion you want to use it. The most important point is, first IGST credit should be completely utilized. Once IGST credit is completely utilized, then you can use the CGST credit. CGST credit should first be used for payment of CGST, then you can use it for payment of IGST. CGST can never be used for making the payment of SGST. It can be never be used for making the payment of SGST. Similarly, SGST, first use it for making the payment of SGST, then use it for making the payment of IGST. SGST can never be used for making the payment of IGST. What is important? IGST can be used for paying CGST or SGST in any proportion you want to use it for. And next more important point is, IGST should be completely utilized. First you should use completely IGST, only then you can go to CGST or SGST. And you can use SGST for paying CGST. You can use SGST for paying IGST only if CGST amount is completely utilized. Only if CGST amount is completely utilized. Okay, I think this is all about the summary revision, and one more short video of place of supply. I will just add it at the end of the video. I hope you have enjoyed it. All the very best for your examination. Please take proper care of your health. Please practice writing. Please practice maximum questions, and please make sure that you revise the provisions on repeated basis. Revision is very important for getting more marks in your examination. All the very best for your examination. Take care. Tada. Bye bye.
Hi friends, my name is Dilip. In today's video, we will be discussing upon the topic called as place of supply. We will do the summary revision of topic called as place of supply. I have already uploaded from section 7 to section 21, that is from supply to input tax credit, and in today's video we will be taking exclusively only on the top IGST Act, which will be place of supply topic. We'll only cover the place of supply in this particular video. So without wasting a single second, let me start with the revision. Okay, section 7 of IGST Act, section what, sir? Section 7 of IGST Act talks about, section 7 of IGST Act talks about interstate supply. What do you mean by interstate supply? Section 7 of IGST Act says interstate supply means a supply wherein the location of supplier and place of supply is in two different states, two different union territory, one state and one union territory. Similarly, import and export will also be treated as interstate supply. Similarly, a supply made to an SEZ unit or SEZ location will also be treated as interstate supply. Sir, oh sir, what do you mean by intrastate supply? What do you mean by intrastate supply? Section 8 says, section 8 of IGST Act. Please note, whatever sections we are saying is of IGST Act only. Whatever section we will be seeing in this video will be from IGST Act only. Section 8 says intrastate supply means supply. Intrastate supply means where supply of goods or services where the location of supplier and place of supply is in same state or same union territory. Then section 9 of IGST Act says where the location of supplier or the place of supply is in territorial water, then the location of supplier or the place of supply will be the nearest coastal state or union territory. Then we have section 10 and section 11, which is talking about place of supply of goods. Section 10 and section 11 of IGST Act talks about what, sir? It talks about place of supply of goods. Section 10 subsection 1 clause A, where movement is there. I'll not tell the subsections. I'll not tell the subsection number. I'll straight away tell the provisions to you. Okay. Section 10(1)(a) talks about where movement is there. Location where the goods are terminated. Location where the movement is terminated will be the place of supply. If the movement is caused by third party, then principal place of business of third party. If there is no movement involved, in such cases the location of the goods at the delivery at the time of delivery to the recipient. In case it is if the goods are required to be installed or assembled at one location, then the location where the goods are installed or assembled will be treated as place of supply. Similarly, if the goods are supplied on board a conveyance, when you are on a conveyance can be anything. It can be an aeroplane, it can be an aircraft vessel, motor vehicle or ship, etc. Whatever type of conveyance it is, train, etc. If there is any goods which is supplied to you when you are on board a conveyance, then the place of supply will be the location where the goods were taken on board, the location where the goods were taken into the train, the location where the goods were taken into the aeroplane. Then we have section 11. Section 11 talks about place of supply of goods where the location of supplier or the location of recipient, any one of them is outside India. So it can only two cases can be there. There is import of goods or there is export of goods. In case of import of goods, the place of supply is the location of importer. In case of export of the goods, place of supply is any location outside India. Now, next we'll discuss straight away without wasting a single second. We'll discuss about the place of supply of services. Section 12 talks about place of supply of services where the location of the recipient and the location of the supplier both are in India only. Place of supply of services where the person who is supplying the goods and the person who is receiving the goods, both of them are in India. Then I will go to section 12. I will go to section 13. If any one of these, either supplier or the recipient, any one of them is outside India. Okay, sir. Now, section 12 subsection 1 told about that particular point which I just now told you. Section 10 subsection 12. Section 12 subsection 2 talks about the general rule or default section. What is the general rule? What is the place of supply in case of services generally. If you are providing the services to a registered person, the place of supply will be the location of registered person. If the services are provided to an unregistered person, if the services are provided to an unregistered person, then if you have, do you have that address of the unregistered person? Yes sir, I have that address of unregistered person. Then the address of unregistered person. If you don't have his address, then the location of supply will be treated as place of supply. Then services directly in relation to immobile property, construction of immobile property, renting of immobile property, renting of hotel in guest house, or renting of marriage halls, etc., or any ancillary services such as interior design or architecture services. All these services which is directly in relation to immobile property, the place of supply will be the location where the place where the immobile property is located or intended to be located. If the immobile, sir, what if the immobile property is located outside India and the supplier and the recipient both are India? What if immobile property is located outside India and supplier and recipient both are India? In such cases, the place of supply will be, the location of recipient. In such cases, the place of supply will be what, sir? It shall be the location of recipient. Section 12, subsection 4 talks about restaurant, beauty treatment, or plastic surgery, cosmetic surgery, outdoor catering, then fitness or healthcare services, etc. With regard to that, because they are performance based services, I also call them as performance based services. The place of supply will be the location where they are actually performed, wherever the haircut is performed, wherever the food is prepared, that will be the place of supply, wherever it is actually performed. Then sir, in case of training and appraisal, performance appraisal services, it can be provided to a registered person or an unregistered person. If it is provided to a registered person, then the location of the recipient, that is the registered person. If it is provided to an unregistered person, place where it is performed. Say for example, if CA Dilip is giving services to Infosys, Dilip is also registered and Infosys is also registered. Infosys is registered in Bangalore, so the place of supply will be Bangalore. Now, Dilip is giving services to students. Now, Dilip is giving services to students. He is training the students. Now, the students are all unregistered person. Now, what is the place of supply, sir? The location where it is performed. Now, as of now, I am performing this at my house. So, the place of supply will be the location where I am performing the location where it is performed. Then, sir, what about admission to an event or a park? I am getting admitted to an event, or I am going to an amusement park. In case you are going to an event or you are going to a park, event can be any type of event, circus or any sporting event, that is IPL, etc. Admission to means, I am talking about only the ticket price. I am talking only about the ticket price. In such cases, admission to an event or a park, the place of supply will be the location where the event is held. The location where the event is held or park is situated. Section 12, subsection 7 talks about place of supply with regard to organizing an event. Please note, admission to means ticket price, organizing means conducting that event. In such cases, the place of supply will be, if the services are supplied to a registered person, the location of registered person. If it is to an unregistered person, the place where the event is held. Sir, what if the supplier and recipient are in India and the event is held outside India? In such cases, what if supplier and recipient is outside India and supplier and recipient are in India and event is held outside India? Say for example, Priya Saris is from Bangalore and there is the event management company from Mumbai and the event is held outside India. Now both supplier and recipient are in India. The place of supply will be location of recipient. Then Section 12, subsection 8. Section 12, subsection 8 talks about transportation of goods services. What is the place of supply in case of transportation of goods, including mail and courier? Including mail and courier, the transportation. If the transportation of goods services is provided to a registered person, then the location of that registered person, that is the location of recipient, that registered person. Sir, what if it is provided to an unregistered person? If transportation of goods services is provided to an unregistered person, location where the goods are handed over, for transportation. Sir, what if the goods are given outside India? What if the sent outside India? Then the place of destination will be the place of supply. Place of destination will be treated as place of supply. Section 12, subsection 9 talks about transportation of passenger transport services. Sir, what is the place of supply in case of passenger transport services? Sir, in case of passenger transport services, see whether the services are provided to a registered person or an unregistered person. If it is provided to a registered person, then the location of recipient, that is registered person. If it is provided to an unregistered person, location where you are embarking the conveyance, location where you get into the conveyance for continuous journey. Then Section 12, subsection 10. Section 12 subsection 10 talks about services provided on board a conveyance. Any services which is provided by to you on board a conveyance. Whenever you are in a conveyance, train, aeroplane, ship, etc. If you take any services when you are in the conveyance, then the place of supply for that particular item will be the first scheduled point of departure of conveyance. First scheduled point of departure of conveyance. Section 12 subsection 11, in case of telecommunication services, is it a fixed line? Yes, wherever it is fixed. For example, landline DTH, it is fixed at some location wherever it is fixed. If it is postpaid bill, then billing address. If it is prepaid, then the location of supplier. And if it is online, any other cases, then the place which is told by the recipient, that is the location which is address mentioned in that. Whenever I make an online recharge, I have to give my wherever the operator is there, that location I will have to give. Based on that, the plans will be showed to me. So address mentioned. Then section 12 subsection 12, in case of banking, financial institution, including stockbroking services, what is the place of supply, sir? The place of supply will be, normally they will be having our address. So that address, sir, what if they do not have the address? In such cases, the location of supplier. In case of insurance companies, sir, what is the place of supply? In case of insurance companies, in case of insurance services, the place of supply will be the location of the recipient, because obviously the insurance company will have our addresses. So whatever address is given to them, so the location of recipient. So this is all about the place of supply of services, where the supplier and recipient both are in India, where supplier and recipient both are in India. Now, place of supply of services where either the supplier or the recipient, any one of this person is outside India. Who, sir? Not both. Any one is outside India. Any one of the person is outside India, then I will determine the place of supply as per section 13. Section 13 subsection 1 says, general rule or default rule is the place of supply will be the location of recipient. This is the general rule. Normally the place of supply will be location of recipient. Sir, what if I don't have the address of the recipient, sir? If you don't have the location of recipient or address of recipient, then the location of supplier will be the place of supply. In case of performance based services, you are conducting any repairs, etc., location where it is performed. An haircut is done for an individual, wherever that haircut is done, or there is a car, I am doing repairs on that car, wherever that repair is done. However, there are two other points, that is two provisos are there. If the services are provided through electronic means from any other location, if it is provided through an electronic means, then the place of supply will be the location of goods at the time of provision of services, wherever the goods are located at the time when the services are provided. Similarly, if the goods are temporarily imported into India for the purpose of repairs or doing any process, and after that if it is re-exported, without any use or with minor use, then the place of supply will be the location of recipient. Then section 13 subsection 4 talks about services directly in relation to immobile property. What is the place of supply, sir? The place where the immobile property is located or intended to be located. Then admission to an event or organization of event. Services with regard to admission to an event or organization of an event. Place of supply is location where the event is held. Sir, section 13 subsection 6 says, if 3, 4 and 5. Sir, 13.3, 13.4, 13.5. What is this 13.3, 13.4, 13.5, sir? Performance based service, immobile property related service and event related service. If these three services are provided at more than one location, if they are provided at multiple locations, then including a location in taxable territory, then the place of supply will be the location in taxable territory. Sir, what if 3, 4 and 5, 13.3, 13.4, 13.5, that is performance based immobile property and event are provided at more than one state in India only, sir? If it is provided at more than one state or union territory, it shall be taken proportionately. Next, services, section 12 section 13 subsection 8, very important. Section 13 subsection 8, services provided by banks or intermediary services or hiring of all means of transport excluding yacht and including vessel but excluding yacht for a period more than 1 month, then for that the location of supplier will be the place of supply. Location of supplier, say in case bank, intermediary services and hiring of means of transport, the location of supplier will be the place of supply. Then in case of transportation of goods, sir, location where the goods are, place of destination of goods. Here it is place of destination of goods, wherever the goods are going. In case of transportation of passenger, wherever the passenger is embarking the conveyance for continuous journey, wherever I catch the vehicle for continuous journey. Okay. Section 12, Section 13, Subsection 1, services provided on board a conveyance. When you are on a conveyance, the services are provided at that time. Then the first scheduled point of departure of that conveyance. Then Section 13, Subsection 2 talks about OMIDR services, that is OIDAR services, online information database access and retrieval services. In such cases, the place of supply will be, the location of recipient. In such cases, the place of supply will be location of recipient. Please note, Section 13 is applicable when one of the person, either the supplier or the recipient, any one of these person is outside India. Then we have Section 16 of IGST Act, very important section, Section 16 of IGST Act, which gives the definition of zero rated supply. Sir, what do you mean by zero rated supply? Zero rated supply means supply of goods or services made in the course of whenever you are making an export of goods or services, it is called as zero rated supply. Then whenever a supply is made to an SEZ unit or SEZ location, that is also called as zero rated supply. That is also called as zero rated supply. SEZ unit or SEZ developer, that is also called as zero rated supply. Okay friends, so this was all about the IGST Act, place of supply. Very important, very quick revision I have made, and very beautiful notes have also been prepared. You can use it for your daily revision purpose. This will be very helpful for one day before examination and for your daily revision. If you have any doubts, you can please WhatsApp me on 962002 2004. I hope you are enjoying all these revision videos. Thanks a lot.